been quite a difficult month for the economy in September 2018, and in this monthly economic update, I will touch on the depreciation as well as some of the other factors that went on during the month. As everyone knows, the rupee has been under significant pressure during the month of September. We've seen close to about 4% depreciation, and the rupee moving from about 161 levels to about 168, touching about 169.70 in terms of the selling rate. The depreciation, as I've explained in monthly economic videos in the past, has largely been due to external reasons. If I put it in brief, we're seeing interest rate rises in the US, which is having an impact in terms of where investors want to invest into emerging markets. So there's been a money flow back into emerging markets. The Fed just raised rates on the 26th, another quarter percentage as well. So further increases will not really help emerging markets like Sri Lanka be attractive. You also have the ongoing trade wars, which is having quite a dampener not only for trade, but in terms of global market volatility, and the uncertainty with the rise in oil, which now has touched about $80 a barrel. So all these external factors have definitely contributed towards a weakening of the rupee as well, and this is not only a phenomenon seen in Sri Lanka, as emphasized in past videos. Countries like India, Philippines, Indonesia have also seen in excess of 10% depreciation at times as well. So the outlook on the rupee moving forward will really be dependent on these external factors, how much the central bank has intervened, because they've expressed that they will, especially if there's volatility, and whether there is now more of a stability in the next few weeks to this weakness. If you look at the other data that has come out as well, growth in the first half of this year was about 3.6%. Second quarter showed an uptick, but still beyond the potential that it has seen, which is about 5% in the last 8 years for the second quarter. But the good point to note is agriculture and services are showing an upward trend. Industrial, in particular construction activities, are yet to show that pickup, but that will be envisaged maybe in the second half of this year. If you look at the other data point, which is your revenue, the government tax revenue as well as the expenditure, first half both revenue as well as expenditure grew by 5%. Revenue is still well below the targeted 21% growth that is for 2018. But expenditure, I think, has been curtailed in terms of public investment, and as a result, we're seeing a primary surplus maintained as well. So interesting to see whether this trend will continue and how much more revenue growth will come in, how much more the new taxes such as the new IRD Act will bring in. First, the second quarter has seen about an 8% growth. Will this growth be sustained in the remaining quarters to bring about that forecasted growth as well? So stay tuned on Economy.lk as we continuously monitor the economy and give you concise updates.